This is Rod Santomassimo with the Massimo Group. BK, Bob Knakal will be with us in just a few moments. So if you have any questions, please raise your hand and we'll certainly have you join us. Also, I see the incomparable Mo Regalado is a co-host as well. If you don't know Mo, you don't know social media. Mo is the social media guru to the CRE folks that we follow, that I follow. She's actually my CRE social media specialist as well. She's Bob's as well. Beth Azor and others. Mo knows social media, so you should know Mo. And no, it's a promo for Mo, but I just think Mo is the best. So we'll let that happen. So I got 726 folks. Do what you gotta do. Eat your dinner. Put the kids to bed. We'll get started in a few minutes once BK gets back. But if you have a question, definitely raise your hand. We'll let you in. Come in. And the first thing we're going to respond to is someone on Twitter has asked me, Rod, what's the nature of your relationship with Bob? Which I tweeted back, I haven't been asked that question since my senior year in the high school prom, when my prom father asked me that question. So we'll get to that in a minute. Again, it's 726. Welcome to Twitter Spaces with Bob Knakal and myself, Rod Santomassimo, and we will be right with you in about 4 minutes flat. Talk to you soon. Well, good afternoon and good evening, everyone. This is Rod Santomassimo, and I believe, BK, you there?
I'm here, Rod. How are you, everybody? So glad you're able to join us tonight. This is, I think, my third or fourth Spaces session, and I have so enjoyed the previous ones. Had a lot of great questions, a lot of great dialogue. Learned a lot. Hopefully, other folks learned some stuff. And I thought, what would be better than doing one of these with Rod, who has been my coach for over 11 years now and my good friend. And I thought it would be great for us to get together, chat with you guys, talk about what we're seeing, and we'll answer questions that you might have about what's going on in the market today. Rod, I know you wanted to start with a few words, but before we do that, I just wanted to second Rod. Rod talked a little bit about Mo Regalado. Mo handles both of our social media, does an awesome job with it. She's absolutely fantastic. And if you guys have any questions about how you're implementing social media or need some tips, I highly recommend you speak to Mo. She's absolutely the greatest. That being said, Rod, I'll turn it over to you if you want to get right into it.
Yeah, BK, let's get into it. And I see so many familiar faces, but I do recognize there are folks on this call or this space, excuse me, it's new to me, that may not recognize us or you or me. Someone asked in a tweet earlier, Bob, what's the nature of your relationship? So I thought I'd start off by telling one about Bob and myself and how we got together. The Massimo Group, the company that I run, that I found some 15 years ago, is a commercial real estate. Well, I'll take that back. We are the commercial real estate broker and agent coaching organization in the world. We have coached thousands of commercial real estate agents and or their teams, helping them significantly increase their income. Years ago, I wrote a book called Brokers Who Dominate, and my friend Jerry Anderson said, well, you got to have Bob Knakal in the book. I said, who the hell's Bob Knakal? I had no idea who Bob was. So I did my homework. I did my research and went, cheese and crackers. I got to get Bob in the book. So I reached out to Bob. We connected. And so lucky and fortunate for me, we were able to get him in the book. And then one day Bob asked me, what the heck do you do? And I shared with him what I did. And what I love about Bob the most, he has so much intellectual curiosity, one of the key drivers to his success. He said, Rod, let's see if we can work together. So I will tell you, I said, how the hell can I help Bob Knakal out? He's phenomenal. But after sitting with him for a couple of days, like all our clients, no one's perfect. And I thought Bob could do some things a little differently. And Bob and I have been working together ever since 11 years now. And so it's a thrill and an honor to work with Bob. And our nature relationship is I'm his coach. He's my client from a professional perspective. We are great friends. So we know our families. But, it's just like me and Mo or Bob or Mo. Mo will tell me, Rod, think about this or think about that, as I will to Bob. Sometimes Mo will tell me, Rod, do this, Rod, do that, as I may with Bob. And we get feedback. So our relationship is two great business partners and friends that just want to do better. That's our relationship. Bob, anything to add?
Just for those of you who might not be around, I've been an investment sales broker in New York City for 39 years. I closed a sale of a building last week, which was sale number 2,259 for me. A little over 21 billion in total sales volume, and love the business as much today as I did when I started. And when I first started talking to Rod about the book that he was writing, I thought he was just another guy that writes books. And then when I said to him, I think it's probably our fourth or fifth session working on the chapter for the book, I said, "So you write a lot of books for a living?" He says, "No, I'm actually a broker coach." And I said, "Broker coach? What the heck is that?" I didn't even know that type of job existed. One thing led to another. And I've always been a firm believer that you always can do better, regardless of how well you're doing. You always can improve, do things differently. Nobody knows everything, and nobody has all the best ideas. You need to open yourself up to folks that can do things differently or new things. And there's some very basic things that I wasn't doing that Rod told me about. And he's been great about helping me be accountable, make sure that I'm tracking the metrics that I should track. And we've gone through several different iterations over the years of what we're tracking, how many things we're tracking, why we're tracking them. And it's just been a fantastic experience. And Rod has been my coach for a while and will always be my coach. I hope I have another 20 or 30 years in me doing this, because I just talk for a living. So it's not manual labor. But regardless of how long that is, hopefully Rod will be by my side.
And I will, BK. So BK, look, this is our call, but folks, BK and I agreed. If you guys want to role play, ask to speak, and we will role play. If you have questions, ask a question, we'll answer it. BK, someone did ask while you were muted how brokers use virtual assistants in today's marketplace. I'll give that a shot and just tell you.
Yeah, if you would, because I've heard a lot about it, but I don't have a virtual assistant and would love to know more about that, because it seems like more and more of those services are popping up.
Yeah, and there's some really good firms out there that are offering virtual assistants. The first two that I know most of, and this is not the only two, by the way, there's CRE Task Wizard, which offers virtual assistants. Digsy, our friend Andrew Bermudez, offers virtual assistants, but there are so many others. Upwork, I think, is the best platform for general business virtual assistants. In fact, I negotiated last week with a 17-year-old girl in Nigeria to help me with some AI implementation. She knew it better than I. And we talked 3 times today. She's in Nigeria, right? So we see brokers using virtual assistants for almost anything that you think you don't want to do anymore. Anything, anything. We have clients that use virtual assistants for making phone calls, for scheduling appointments, for doing research, and everything in between. We have virtual clients that use virtual assistants. Some of our virtual assistants do skip tracing, data research, everything that you shouldn't be doing because you all shouldn't be doing this, that is not worth your time, virtual assistants can handle for you. My second book, Teams Built to Dominate, virtual assistants didn't exist when I wrote that book. It really didn't. And so if I rewrote that book today, I would talk specifically about virtual assistants as a team member to your scale team.
Look, I've gotten approached by a number of people who have businesses that are designed around helping brokers maximize their productivity. Some have local US based people who can help, some folks who are based overseas that can help. All types of tasks be done. I'm just at the forefront of personally looking into these things and seeing what type of help we might be able to get from these folks. But it's definitely something to think about. It seems to be a lot more cost effective to use these services than hiring folks, which has a positive and a negative to it. It's something that is definitely worthy of looking into.
Okay. And BK, if you think about it, I've only met Mo once. And I think you met her once the same time I met her in Dallas at Massimo, but we've never met her. She's really a virtual team member. She's an assistant to our team.
I never even thought about that because I talk to Mo multiple times every day, but I have only physically met her once in Dallas at Massimo.
Okay. I'd love to see people ask some questions. Can we do that?
Sure. Sure. Absolutely. Absolutely.
Okay, I got one right here. Okay, so
We have 45 Wall Street ask, talk about the valuations in New York City and frame up the opportunity to buy NYC in terms of historical perspective, valuation multiples, how you think equity can grow, compound from these valuation levels. So that's the first part of the question. The second part of the question is privately negotiated transactions versus stock market values.
I think one of the unique things about what we're going through now is that each product type is performing very differently. And that is really the biggest differentiator between today's market and the three other major downturns that I've lived through. The first being the S&L crisis in the early 90s, second being the recession in the early 2000s, and then, of course, the GFC in 0809. During those downturns, everything was kind of moving in the same direction, just going down by varying degrees. I think today, for a variety of reasons, things are moving in different directions, and the value proposition for capital is different relative to each of them. For instance, our multifamily market has very robust demand today. That demand is very, very broad. A lot of the historical New York capital that, the families and the high net worth individuals that for decades started buying around the country in 2018 when the rent laws started to change very adversarially against ownership interests. And so new capital has come in. Cap rates are elevated because borrowing rates are higher. But the fact is, demand is robust, and free market apartment rents are increasing very significantly based on the fact that every piece of legislation that has either been implemented or ignored over the last 5 years has exerted upward pressure on free market rents. Our legislative session ended last week. Nothing was done to incentivize the private sector to create more housing. So I expect that free market rents in New York will go up 10 to 15% by the end of the year. So that market is performing fairly well. If you look at the retail sector in New York, it is a very, very positive sector of the market today, and rents are down fairly substantially from their peak levels. And rents in the retail sector have been falling for 5 years in a row, but it's generally accepted that they have stopped going down, that leasing activity is picking up. And we're getting investor calls for the first time in 5 years saying, do you have any retail for sale? So I think retail is a bright spot. The different sectors of the land market are functioning differently. And again, that could be a very, very long conversation. But basically, the land market for hotels and multifamily rentals is essentially non existent today. Hotels, because you can buy existing hotels for less than land value in a lot of cases, and rentals because there's no tax abatement program any longer. And so it's not financially viable to build. Even if you were to get the land for zero, it doesn't make sense to build without the tax abatement. There is a fairly robust market for condo land, but those values are down 20 to 30% from last September when construction financing costs really started to blow up, and you're getting construction loans plus or minus 10% today. So that market is functioning, but at a lower price point. And then the office sector, which is the most opaque and actually very interesting, Class A new construction is doing really well. There's tenant demand. Those buildings are perceived as being very different. And the difference between a new construction Class A office and an older building, even if it's well maintained, is really like night and day. If you're in some of these new buildings that have been built, the massive soaring ceiling heights, no columns, they're just really unbelievable. And the Van Barton Group just built a building down on Late Street, a 100,000-foot building. The user paid $2,700 a foot for new construction office. So the demand is there, but everything else in the office sector is really facing some challenges. There's a question about what tenant demand is going to be, what's going to happen to aggregate demand moving forward. A lot of folks want to convert those properties to other uses, mainly residential. That values are not quite at the point where it's feasible, but they're getting down to the point where they could be feasible. But the city should enact a tax abatement program like they did downtown, which helped the city, the financial district in New York City, really boom going from about 1,800 units at 9/11 to about 30,000 dwelling units today, mainly incentivized by that tax abatement program. But I think that we're seeing across the board, we're seeing values per square foot at levels that in some cases are what we saw 15, 20 years ago. And I think the buying opportunity is very significant. If you are a believer in New York long term, then I think it's definitely a buy opportunity. And some people give me grief for saying that. They say, "Hey, Knakal, you're a broker. You make money when people buy buildings." Well, while I'm telling people they should buy, I'm telling every single seller I meet with they shouldn't sell today, because I don't think they should, because I think value will bounce back. And there are some people, for a variety of reasons, that either have to sell or for strategic reasons want to sell and deploy that capital elsewhere. But I lead every single presentation with, you shouldn't sell your property today. So I'm not talking out both sides of my mouth. Anyway, I hope that addressed your question.
So I want to talk about the question that they asked Bob about New York, but for everyone else in all your markets, let's talk investments first, right? So investments first. I think the most underutilized approach right now is the return on equity. It's amazing how many brokers don't understand the term and the actual application of return on equity. So there was a great article written by one of our 35 amazing coaches, Doug Molyneux, in the Wealth Management magazine. Hopefully you all read Wealth Management, the National Real Estate Wealth Management magazine. Understand that concept of return on equity and how it applies to every owner today is, we say, number one for all of you. And for you tenant-based, that also applies in many ways to the, not the equity itself, but in regards to what they have from their real life in business. So what I mean by
Your
that is,
business could receive
too
up
many of
to
you,
$26,000 for
well,
every
what
employee
is
you
that?
maintain.
That's $26,000. So what I mean by that is, guys, thinking in terms of real estate versus real life when it comes to tenants, big issue. Real estate versus real life. Focus on the real life right now, and you will get more listings. So return on equity for those outside of New York and in New York, check it out. Check out Wealth Magazine. You should read it all the time. And look at real estate versus real life for your tenants out there and your leasing agents. That's what you should be focused on, because that's going to get you more opportunity.
All right. So from Miami Retail Guy, we have, what's the right mindset to start your day for cold calling?
Oh, I love that. That's a great question. Number one, it is your duty and your obligation as a commercial real estate authority to make calls. That's number one. It's your duty and responsibility to make calls. Cold calls, if you have to. I prefer warm calls. I prefer presence campaigns. So supplement your cold calls. So we're proving on live that BK and technology, we're having an issue right now. But that's number one. You owe it to yourself and to your clients to make calls. Number one. Number two, what's your why? Why do you get in the business? What are you trying to accomplish? Your why drives everything, right? What are you trying to do right now? What's the driver for why you're trying to drive and build a business? What is it? And go as deep as you can. Peel that onion back as best you can. And if you answer your first question, ask myself, so I want to make more connections. And finally, how do I get motivated every day? Look, sometimes I play James Brown's Who's the Boss? Great pump up song, by the way. And I just make the calls. And calls a game. It's a numbers game. You make the calls. You realize if you give the adaption, a Grant Cardone theory would be expect a no every time. If you expect a no every time, you're going to do pretty good because you're going to get a yes. So there's three things to help you with your cold call techniques. BK, any thoughts?
You know what? To me, it's an exciting time. In order to cold call effectively, I think you have to block out the time at least 2 weeks in advance. I like to do at least 2 hour chunks of time, 2 or 3 hours at a time. I want to fill up my call sheets with notes. Make sure I get my calls done for the week. That's the number one goal. Always, it's always a great feeling to get those calls going. But the mindset is, have a talking point that you want to share, something that you think folks would be interested in hearing about, have a theme for the calls you're going to make that day, and go ahead and just get to it and just make one right after the other, and make sure you have your water with you or your Diet Coke or whatever it is, so that you don't have to get up and wander around, and just sit there and stay glued to the phone and you hammer out as many as you can in the time that you've allotted for those calls. But it's almost like you have to psych yourself up. You're going into battle. You want to get on the phone and just try to make that calling time as productive as possible.
Great take, BK. I'll add one more thing. Bob met this gentleman. Our top producing client last year was a gentleman named Tal Friedman out of Miami. He's in Miami, South Florida, and he has an attitude that everyone needs to know who he is, pure and simple.
So, Bob, this is from the Shopping Center Mentor. He said, last time Bob had a call, I asked about his personality test. He said he did one with Rod and you guys would find the results. I don't know if you guys have had the opportunity to do that, but can you both expand on that?
Okay, so personality assessments, they're not tests. They're never tests. They're assessments. They're ratings, they're not scores. And they're all two-dimensional. The way we do it, we use something called an AV vector analysis, which is used by Fortune 500 and NFL teams. And we look at 4 vectors. Think of DISC, think of Colby. They all have vectors. They're all two-dimensional. But in our assessment, we look at assertiveness, sociability, calmness, and conformity. And I want you to, as brokers, think about that, right? How assertive you are, how social you are, how calm you are, and finally, how much structure you have. And through assessing thousands of brokers, we look at the top tendencies of top producers. Again, these are tendencies, they're not absolutes. So please don't think if you don't fit this profile, you cannot make money. Because in fact, many of our clients don't fit the top producer profile, but they all make millions of dollars. So understand that. So what we find in BK, just happened to be the case, the top producer profile in a two-dimensional format, if you think of verticals from 0 to 9, right? 0 being low, 9 being high. Assertiveness, they're high assertive. They tend to be a 9. Sociability, they're medium social, believe it or not. They tend to be a 6, 5, 6. Calmness, low, low calm. And conformity, low conformity. So we found is in our profile, top producers tend to be 9632, 9632. So lo and behold, when we assessed Bob Knakal, his assessment was returned a 9632. Highly assertive, goal driven, social. He's a very social butterfly, but he's also not going to be dancing on tables with his shirt off. That's not who he is. He's not very patient, no surprise there, and not very structured, no surprise there. So what BK does, he builds a team around him that has more structure, that's more calm, and if need be, less assertive. Think admins. So that's his profile. If you want your own profile, you all can have one. You go to creperform.com, and we actually offer those profiles for brokers and brokers teams.
Having the profile done, I thought it was great. We've used that test on some of the folks that we've hired, and I think it's been pretty accurate.
What did you change based on the profile as it came back? Did you change any of your behaviors or did you just keep doing what you were doing?
No, I tried to delegate more, understanding that, and be a little bit more conscious of the abrasiveness or roughness in your personality. Some New York characteristic came across in the profile. And so I just became a little bit more aware of the way I speak to folks. So it's always good to be introspective, try to look at your strengths and your weaknesses and figure out how you can improve. Because as I said before, no matter what, we all can get better in different areas. So it's important to take stock in yourself and try to be the best you can be.
That's fantastic. I love that. So I'm going to bring on North Florida Industrial, who's been waiting.
Yeah, Bob, thank you for putting yourself out there and jumping on this Twitter Spaces. It's cool to see that. You're a legend in my book. And so thank you for hosting this. And Rod, same to you. I just bought your book and Brokers Who Dominate. Now I just saw on your LinkedIn that you have a new book coming out. So I'm excited to read that.
Well, thanks for the kind words. I appreciate you joining.
Yeah, thank you. So I'm here in Jacksonville, Florida with Colliers and specialize in industrial real estate. And so about a year and a half into it, and I'm on a good team. And I've been doing a lot of tenant rep work and just wanted any advice you have for a broker starting out and how I should be tracking the market. Right now, I'm just putting it pen to pad while I'm out in the streets knocking on doors, and then enter it into what's called smart sheets. And our team just recently added a CRM system. So any advice you could add there, I'd love to hear it.
As we've talked about in the other spaces sessions, I think that specialization is really a key and something that's very important. It sounds like you have an area of specialization. I would just put yourself in a position where you can answer the most frequently asked question you're going to get through your whole career is going to be, how's the market? And figure a way to answer that question with statistics rather than adjectives. If you are doing industrial real estate within a certain geographic boundary, I would know how many industrial buildings there are, how many square feet of industrial space there are, what's the average occupancy, the vacancy, who the major tenants are, who the major owners are, how many buildings the major owners own, how much square footage they own, what market share they have, what percentage of that space or how much of that space leases every year on average for the past several years. Try to get that data. What industrial buildings have sold and how much have they sold for? What have the cap rates been? Put yourself in a position where you can talk to somebody for even just a few minutes and get them to feel like, hey, this person really knows the market, knows what's going on. That will immediately give you a great first impression, will show that you know the market, and also will help you see trends. So if you know that, and I'm just totally pulling numbers out of the air, but if you know that 6.3 million feet of industrial space were leased in your market as an average for the past 5 years, and the first quarter had 3 million feet leased, you can say, hey, the market is really on a great pace. I think we're going to double, the market's on pace to double what we've seen historically. And that's a factoid that any owner of industrial space or a tenant in industrial space would want to know about. So I think tracking the market, understanding your statistics, the size of the market, the way the market has operated historically, what your average of those metrics have been, will put you in a position to differentiate yourself. And as we always say, that differentiation leads to a competitive advantage. And that's really what we're all trying to get in the market, is trying to get some kind of a competitive edge that will allow us to perform better than others.
So I'm going to add to what BK said. First of all, he's absolutely right. Never, ever, ever, ever answer a question, how's the market, with an adjective. Hot, cold, slow. No one, that's your speak. No one knows what that means. And then your commodity. At Massimo, what we focus on is that our clients become authorities. So while you're tracking all that information, which is essential, you should all be tracking. Bob doesn't have CoStar. Bob has MeStar, not me, Rod, as me as in Bob. Bob tracks his own data. Too many brokers, and I love CoStar. It has a service, but we rely and depend on CoStar versus MeStar. And if you want to be an expert and authority, be MeStar, track everything, and not only that, then figure out how you're going to share it with the market and then articulate it in such a way that people look at you and say, damn, that North Florida guy knows what the hell he's talking about. Next time I have an opportunity or I need an answer, I'm going to reach out to him or her, right? That's what you want to do. So that's why I think he's a great, strong start is, and it's easy to do, believe it or not. You can beat experienced, leveraged legacy brokers in your market if you just go out and track your own data. I see it every single day.
Yeah, and I'm telling you, Rod, one thing I'm going to be coming out with in the next 2-3 weeks, a bigger and bigger share of my personal practice has been in the development site sales space or land space. And I'm coming out with a land index, which is something that's never been done before. If you ask even appraisers and other brokerage companies, what was the average price of land that sold last year in Manhattan, they always give you one number. Historically, it's been one number. It's $436 a buildable foot. I disaggregated that data into 5 separate buckets because each bucket operates very differently: residential rental land, residential condo land, hotels, office, and then a miscellaneous bucket that has healthcare properties, medical properties, et cetera, things that don't fit into the other 4 buckets. And I took the opportunity during the pandemic. There was a land appraiser that was retiring. I bought their library of data compiled with all my old files that I had And so I'm having this land index track historical trends in the land space of how many of each of those in those 5 buckets, how many development sites were sold, what was the aggregate buildable footage, what was the price for buildable footage, all this data, and I have it going all the way back to 1984. Now, that is a piece of research that nobody else has, and I don't think anybody else could put it together. So that's what you're looking to create, a database, a resource that nobody else has. Because if you're just printing out an RCA printout or a CoStar printout, a kid in high school could print that out and send it to somebody. That's of no value in my mind. I think what you want to do is have a unique insight, call buyers and sellers, call tenants and owners, try to get as much information as you can that is not publicly available. Those are the golden nuggets of data and statistics that people will want to call you all the time and want to get the real story on what's happening. And so you're creating real value in yourself if you're able to generate your own data.
Hey, thank you both for those responses. And what systems are you using to track the data?
New York City has a system called ACRIS where all deeds are recorded. Also, demo permits, building permits, a whole bunch of stuff you can get from the city databases. And then there are some other services we use also. Look, we do look at CoStar, we look at RCA, we look at there's a local service in New York called Pincus. We subscribe to these things just to make sure that nothing's slipping through the cracks, but it's a combination of those resources plus reading all the trade publications. Often there's great data that gets into a press release that might not be picked up on something that's filed with the city relative to who equity partners are on a deal or something like that. So you have to just be aware, get in the way of as much data as you can and distill it down into something that is uniquely yours.
Rod, did you have anything to add?
Nope, that's perfect. Let's move on.
Okay, so this one comes from NYC Resi Guy at Arthur Hunt NYC. He says, BK, congrats on the article with the real deal. I'm in the Resi world. I wish Resi firms were structured and built more like how you built MK. I rely heavily on referrals, never cold call. Is cold calling more common in the commercial world?
Yeah, I don't know. I think cold calling in the residential world would be a really, really tough thing, only because everybody in existence is a potential client, right? I think you have a bottomless pit of folks. I guess you could potentially do it if you picked a finite supply of buildings. And again, this very much is dependent on your perspective. If you are a buyer rep, then literally the whole world is your oyster. If you're a seller rep, you could pick, okay, I'm going to pick all buildings of this type or this vintage within this geographic market and call owners of every condo unit. I'm assuming in the residential world, you're referring to apartments, call those owners. But in the commercial world, based on the turnover ratio, and in Manhattan, for instance, there's 27,649 buildings south of 96th Street. The average turnover of that stock of buildings going back 39 years has been 2.6%. So I know that when somebody buys a property in Manhattan, on average, they're going to own it for 40 years before they sell it. So you're not cold calling them every week. I think to develop a relationship with somebody in the private capital investment sales space, calling someone a prospect once a quarter is a great frequency to be talking to them, not less than that, not more than that. In the residential world, I don't understand the market well enough. I don't know the metrics to suggest how you should be cold calling, but I think it is definitely part of the commercial world. I'm not sure how effective it would be in the residential space. I think a lot of my perspective on that would be dependent upon what the average holding period is for people who own apartments in a certain area. If on average they own them for a really long time, maybe it's not as effective, but I really don't know the residential market well enough to have a strong opinion on that. Rod, maybe you want to address that?
Yeah, first of all, great question. I get that question a lot. We don't believe in cold calling, never have, never will, because you shouldn't be. Cold calls assumes you have nothing of value to share. You're just dialing for dollars. That's not a way to make a living, cold calling. But look, everyone should answer these very basic questions, right? So, look, I've been coaching BK for 11 years, and we've done a lot of different campaigns. But the basis of every campaign is based on these two questions, right? Who do we serve? How do we serve them? I think another way, what market are we going after? How are we going to serve that market? So with BK and I, over the years, give some examples. First one was residential multifamily assets. How do we serve them? We come up with a value proposition. Maybe it was land plays. Okay, who do we serve? Landowners, the development sites. How do we serve them? Now it's development sites. And when you answer those questions, then you come up with a value proposition of what value you could bring to them and share with them. So now it's not a cold call, is it? So now you take that value proposition and you start creating assets that surround a theme of who you serve and how you serve them. And you create a presence play around that theme to your market. And then you follow that up now. I got value prop, I got presence working. And now you follow up with a prospecting campaign in a certain cadence that you're reaching out to specific audiences of who you serve with specific messages of how do you serve them, and you're getting a better response rate because A, they've seen your stuff, they know you, like you, trust you, and B, your cadence is direct and purposeful, and therefore cold calls go away, warm calls, more meetings, more listings, and that's the formula.
Yeah, and I think also to add on to that, cold call is really only appropriate term for the first year that you're prospecting. Because I think in the investment sales world, I think having a target audience of anywhere from 1,000 to 1,200 prospects is the right number. You should be able to speak to all of those folks within a quarter. So after you go through that list 3, 4 times in a year, those are no longer cold calls. You've probably spoken to everybody a couple of times. You get to know them a little bit. They get to know you. You're sending them mail on top of it. You're sending them emails. You're sending them hard mail. You're sending them texts. You're developing that relationship to the point where after a year, they're no longer cold calls. They're really prospecting calls because you're just talking to people. Cold call implies you don't know that person. I still make cold calls today because there are constantly new markets that I'm getting into. When I hear there's a zoning change going on, you want to jump all over that and speak to owners of properties in that area. If that's an area that includes folks who are not on my main target list of 1,000 to 1,200, I want to reach out to those folks and still call people that I've never spoken to and totally enjoy doing that. So, I think cold call is at the beginning, but after that, they're all prospecting calls.
All right. Hopefully that answers his question. Let's pop on over to Andrew. Andrew, you're on.
Hey, how are you guys?
Andrew, how
Andrew.
you doing?
Good. Bob, you're not a legend, man. You're not dead.
There you go. There you go.
Yeah. No, the one thing I will disagree with you on is you can specialize if you're metropolitan, but if you are like in a tertiary market, you really can't specialize. That's the only thing I was going to disagree with you on. But
Yeah,
everything
no,
else, I completely agree.
I think the more specialized you can be, the better. But in tertiary markets, you have to make a decision, right? You have to make, if you're doing retail leasing in a tertiary market and there's just not enough space to make a good living based on what those metrics dictate, you have to make a decision. One, you either increase your geography by going to the next town that has retail in it. And if that's 20 minutes away, maybe you do that. If it's an hour and 20 minutes away, maybe you don't. So then you have to make a decision whether you then want to get into other things. You want to lease office space and sell buildings and do other things. And I totally get that. The idea is ideally in a dense urban market, you want your area of specialization to be small enough that you can be a true expert and know it and understand it better than anybody else in the market does. But it has to be big enough that you can make a good living. I could easily be, or anybody could easily be, the leading expert on 1 square block in Manhattan. But that's not enough to make a great living year after year. And so it has to be small enough so you can become absolutely the market expert in it, but it has to be big enough that you can make a good living. So I completely agree with what you're saying.
That's good. One thing I want to talk to you about, I really believe that most people aren't asking you, is remember when we went through that whole COVID
Yep.
and then you decided to make that book with the developments and you were walking around like documenting everything and all that stuff. Tell us about why and how it impacted your business.
Okay. Why was because of a frustration that I had. And I'll tell you, I wanted to do that walking tour forever. Not forever, for 10 years I wanted to, because as I started to do more and more land sales, I needed to have a better handle on what the pipeline of stuff coming to the market was. And in the hotel space, office space, residential rental space, no one was publishing reports on what the pipeline looked like. Each residential firm would produce a condo pipeline report, but the results of each of their reports were so vastly different, I didn't know which one to rely on. So I said, you know what? I got to go count these buildings myself and look at them myself. So the pandemic was a perfect time. The city was a ghost town, there was no traffic. I accomplished in 220 hours in the field what would have taken over 1,000 hours under normal city conditions. And I did it because I wanted to understand the pipeline perfectly so that I could then have better quality valuations based on the assumptions I was going to make based upon how much stuff is coming to the market. And I'll give you a perfect example of this. I'm working on an office development site for a 500,000 square foot office building, looking for an equity partner for the owner. And I called the owner after they had done a UCC foreclosure to get ownership of the site. And I called up the owner and I said, "Hey, I'd love to come talk to you about what's happening with the office land market in Manhattan." And he said, "Oh, Bob, thanks a lot. I've met with other brokers, leasing brokers, and they brought me information on all 9 office buildings that are under construction in Manhattan." And I said, "Really? Well, would you like to know that there are actually 47 office buildings under construction in Manhattan?" And he said, "Oh, no, there's no way. You must have the wrong data because I've seen the list." I said, "Let me come over with my map." So I brought my 27-foot long map into his office, spread it out on the conference table. I had a blue post on every office building under construction. I said, "Point to one." He pointed to the one and said, "That's Boston Properties, building 270,000 feet." Point to another one. And he went through 3 or 4 of them, said, "This is amazing. Send me an agreement. You're hired." That's the power of the information. So why did I do it? I wanted better quality information than others had because I wanted to understand the market. I also wanted to be able to put valuations together that would be very different or better quality based upon the understanding what the pipeline for each product type was like. And so that's what came out of it. And then that the map and understanding the pipeline was one of those things. Putting together the land index, studying comps going all the way back was another. Then putting the map together. And I just had a group from Hong Kong in the map room today. And we spent 3 hours just looking at the map, talking about what was happening with different buildings that were under construction and different potential sites that they may be interested in buying. When am I going to spend 3 quality hours with a billionaire family that I'm meeting for the first time? I wasn't intending for it to last so long, but you're in the room and they keep asking questions. I'm like, this is great. And then the book that I put together was a summary. That's another thing that I did, is just put together a summary of all my transactions. That's how I know exactly how many buildings I've sold and the dollar volume and everything else. But out of that, I put together a series of books, and I showed one on social media, which is the development site sold, which is really cool. I think the coolest one because it has before pictures and after pictures and information on the site, client testimonials, etc. But I have one of those for apartment buildings I've sold, portfolios I've sold, a book just of hundreds of testimonials I've gotten from people. I put together a lot of stuff, collateral information during the pandemic when I had the time, that now if I'm going to run out to a pitch or a meeting, I can just grab 4 or 5 things off the shelf. I'm ready to go. And that's what you want to do. You want to be able to demonstrate your capability relative to certain types of opportunities.
All right, Andrew, I hope that answered your question. We have a question from Cameron Graham. He says, Bob, as I know you only focus on listing properties, when you have a friend or inactive client who approaches you to help buy a property, how do you respond?
I generally refer it to somebody. Clearly, if they're interested in buying a property that I have listed, I'm happy to show them anything I have an exclusive on. But if it's not something I have, I'll refer them to other brokers to work with other brokers that may have properties for them. I don't do any buyer rep whatsoever.
Okay. Next question, real quick.
Hey, Mo, before we get there, I'm going to add something to the prior question. I think it's really important. I'll debate Andrew tomorrow on this, but I think sometimes we think we can't be a specialist in a tertiary market is a crutch versus reality. I can look at people specifically on this phone call right now, and I'm not going to call them out because I know who they are, that are in tertiary markets that are absolutely kicking butt 100%. And they're not a generalist. They're a specialist. Some are specialists in certain product types. Some are specialists in multiple product types, but they're all specialists. And I see 4 or 5 people on this call right now who I know are in tiny markets, but I also know are producing a hell of a lot more than the average broker. So just be careful to think that because you're in a small market, you have to be a generalist. People don't work with generalists. People want to work with specialists. That's why they work with Bob, even though he's in New York. He's a specialist. He's the authority. There's specialists in every market, and that's who today, especially, people want. People want clarity. They want certainty. They're going to work with people that are authorities. So always be the specialist.
Yeah, look,
That's
the reality is that the more you can specialize, the easier it is to differentiate yourself. And again, that's the thing that leads to the competitive advantage.
So this question on Twitter is from Covered Land Play at UntrendedYOC. Bob, what would you say are the reasons that you love working with your most ideal favorite buyers or owners of real estate? And what are the things they do that make them so great to work with?
That's a great question. There are a number of people that I love working with for different reasons. I can tell you that their personality is one characteristic, and I'm not going to mention names because I will invariably leave somebody off and I don't want anybody to get mad at me. But their personality is one, their astuteness and how smart they are is another. I love working with folks who are really super smart. And then on the buyer side, I love working with buyers who don't sweat the small details, that look at the big picture, realize that getting the property purchased is the most important objective, and not getting bogged down with small details. And then clearly, from a broker's perspective, you want to work with principals who mean what they say and say what they mean. Having integrity and honesty in the way you do things is something that brokers rely on and appreciate very significantly. I have one guy who calls me up all the time when he gets our mailings, email blasts, very excited about a property, wants to offer a full price right off the bat. And then we've never sold a property to this guy. So I kind of know that it's almost a wasted call. When he calls, sounds so excited. The first 3 or 4 times I was very excited, but then it was clear that that wasn't going to go anywhere. So I think as a principal, the best advice I could give you if you want to ingratiate yourself with brokers is to just be straightforward, honest, no bullshit. Just say what it is, say what's on your mind. And I think that transparency and straightforwardness is something that brokers really appreciate.
Rod, we could ask you the same question. What kind of brokers do you like to work with, or who do you like to work with?
I love working with Bob. but besides that, look, I don't want to embarrass him. There's plenty of people on this call that we work with, and some in particular that they are so dedicated to their craft of commercial real estate. They're so dedicated to being the best broker they can be. Bob obviously has that drive. He's the best broker he can be. But look, everyone on this call, if you're a broker, maybe you're not a broker, but if you're a broker, you made an election that commercial real estate is going to be the vehicle to build the business and life you've desired. That's the choice you made. But that choice in itself is not going to make it happen. You got to have the drive. You have to have the curiosity. No matter how successful you are. Look, no one on this call, and I apologize if I'm wrong, is more successful financially than Bob Knakal. I don't think so. I don't believe so. But he always wants to do more, and not from the financial side, but from the growth side, the intellectual side, the curiosity side. Those are people I love, love, love working with. And I'll call someone out in this call because I think he just emulates that as much as BK. There's a journalist called Mason Fiscione. He is an incredible broker, but very young, but has it. He just has the drive. And that's why I love working with folks like that.
That's fantastic. I love that answer. And we actually do have a question from Mason that I'll get to. But first, I want to go to Peyton. Peyton's been holding for quite some time. Peyton, you're up.
Hi, thank you.
Peyton, how you doing?
I'm doing great. How are you, Bob?
Good, thanks.
Good. Quick question. So I'm actually a rising senior at Georgia State University. I'm interning with JLL this summer on the capital markets team in Atlanta. And I wanted to ask you, what are some of the ways that you think I can provide value to my team this summer?
I think just doing a conscientious job with the tasks they ask you to do. But I would try to learn as much as you can, ask as many questions as you can to people around you. I think that when we look at the field of interns that we have, we're looking for folks that have a good personality, are smart, inquisitive, asking questions, doing the tasks at hand. They may ask you to work on a project and make a presentation at the end of the internship. So I would put a lot of elbow grease into that. But mostly it should be a learning experience, and try to grab folks when you can, have a coffee with them and just ask them some questions and try to learn as much as you possibly can. I think that's really the best thing that you can get out of it.
Great.
Rod,
Thank
what
you, Bob.
would your advice for Peyton be?
Well, are you comfortable on the phone, Peyton?
Yes, sir. I've made a good bit of cold calls in my life.
Okay, here's what I would do. I would go to who you're working with, who's your senior mentor, and I would offer to them, hey, look, no doubt you have hundreds of inactive clients. Let me do this for you. And let's say your mentor is Joe Smith or Jane Smith. Your mentor is Jane Smith. You then call all of Jane's inactive clients or inactive clients. That means you work with them in the past, have done a transaction, lease, sale, finance, whatever it is in the past. They're usually in capital markets, so it's going to be sale. So you say, look, and you make calls. Hey, I'm calling on Jane Smith's behalf. I know we haven't worked since whatever date. We just want to find out what's new since we last spoke. What's new? How can we help? Jane would love to jump on a Zoom call or visit you for lunch or whatever. And all you do is talk to people and set meetings for Jane. And then Jane is totally blown away because you're getting all these meetings for her and she's filling her pipeline. And maybe you ask for a piece, so you're not licensed, you can't yet. But that would be, for me, if someone walked in and said, hey, I want to help you get more listings. Here's how I think we can do it. I'm calling on your behalf. I'm asking these 3 essential questions, and you fill up their calendar, they're going to ask you back immediately at the end of the summer.
Great. Thank you. Thank you. I appreciate that.
Good luck.
Thank you.
Okay, Miles, you are up. Thank you for being so patient.
Of course. No, this is phenomenal. Thank you so much for taking the time, Bob. 2 quick questions. One's almost a yes or no. I don't know if you talked about much. You talked about the 2,700 plus transactions you've done. Is your sale to Cushman the most successful? And then the second question, completely unrelated. Anytime as a seller or representing a seller, you've come across Donald Trump successfully or unsuccessfully, and any fun stories about that?
Okay, first one, yes, the C&W sale was the best sale I've been part of. I wasn't the broker on it, though. Our investment bankers were. No doubt a great one. And I have not done any business with the Trump organization. I've met Donald and the children many times, but we have not done any business together.
Thank you. Appreciate it.
No,
Sure.
now I'm going to embarrass him because he's not telling you the truth. Okay. I remember BK, when you called me after you closed, I won't mention the figure because it's not relative. Well, it's relative. There's a certain figure building that you closed on for the very first time. And you were happier than when you sold your company for $100 million. That deal you did, which was years before then, you were like a schoolgirl. You were so excited and so happy and so pumped. And you realized you could do these amazing things I remember that day specifically. And for
Yep,
me,
that was the sale of the MacLeod portfolio, which was my
yep,
first deal over 100 million. It was
yep.
a 7 or 8 building package of apartment buildings. We sold 3 million to Richard and Adam Parkoff. That was indeed a great one. That was a fantastic deal. But I will say this: it was no better feeling in the world than closing the first one, which was 1421 Third Avenue, and it made me feel like, hey, I really can do this. So I think, if I had to say, I think the feeling of closing the first one was probably the best feeling in the world.
That's awesome. All right, we have some more Twitter questions. So from Hughes, commercial real estate, in your experience, and actually this is great for both of you, in your experience, do you find it productive to leave voicemails when cold calling?
Always leave a voicemail, and if I'm calling someone on their cell phone, I always will leave a voicemail and text them, because I think people see the texts faster than they'll listen to the voicemails.
And I 1,000% agree. Always, 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 always leave a voicemail, or in fact, it didn't look like you even made the call, and then send an email if you must, or text better to tell them why you called.
So in the voicemail, do you leave like your value proposition, or do you just say, hey, this is Joe Blow calling you, yada, yada, yada?
It would depend on the nature of the relationship you have with the person who you're calling.
Completely agree.
All right. So next question is from Matt Real Property. He says, how can someone actively work on improving their communication skills?
I think there are classes that you can take. I think public speaking is a very, very important part of our business. And I think there are organizations like Toastmasters and things like that can help you with communication. I think it's also important to understand that most people read and speak at a 5th grade level. And so you want to make the stuff that you write as elementary as possible, because that's the way most people relate. Some people try to both speak and write in a very complicated way because they think it sounds more impressive, but actually, people like to communicate, or generally are more comfortable communicating on a relatively simple level. So keep it simple, I would say, and seek out places that you can go to. There are companies that provide services to help you with communication skills.
Yeah, and Bruce Lauer, who was my first broker record in 1989, first day on the job, he said, Rod, you're going to Toastmasters. And I was so nervous, incredibly nervous. So, yeah, I love, love, love Toastmasters, 100%.
Or you could be like me and get thrown into radio, and then, hey, there you go. Remember the little Mexican lady in the box? So it happens. We have a couple more questions on the Twitter thread. This is from Martin. I am not going to say your last name because I will butcher it. Rod, do you offer programs for newer agents? That's the first part. And then Bob, how do the opportunities compare between, and he wrote lane sales, but I don't know if that's correct, if he meant land sales, to retail leasing, and he's asking about Houston, Texas.
I'll go really quick. We offer programs for every level of experience, success, and yes, budget. You just go to MassimoGroup.com and we lay it out all there for you.
Yeah, and with regard to sales of any type of property outside of New York, I just don't know the market, and I don't quite understand exactly the question. But I think when we sell retail properties, often because of the right zoning jurisdiction that New York is, we typically have a buildable square footage for each property. So often 1-story retail properties are development sites when they're sold, unless there's a very long-term lease in place. But generally, a lot of the 1-story retail that we're selling, those properties are development sites if they're in the proper zoning district. So it really depends on zoning and lease term to determine whether that opportunity is a retail property sale or a land sale.
Okay, great answer to that question. Next up, we have Mason Fiascone. Mason, he says, BK focused on building my team and forward investing while velocity is down. Can you break down your team structure, support staff, who does what, etc. I know you're not doing all the work yourself, like even the carts you're sharing. How does it get done?
Yeah, well, Mason, first of all, great to hear from you. I look forward to seeing you again soon, I hope. But the team structure is in place to handle a lot of the administrative details. There's Rod always says if you don't have an admin, you are an admin. So you need somebody to do all those administrative things that need to get done. And then you support the transaction pipeline. And I think that a lot of the things I have transaction associates on my team that help out with a lot of property tours, putting information together, setups together, going to the buildings department to get information, abstracting leases, taking photos, a number of things that need to get done that the team helps out with. John Hageman has been my partner for over 20 years, who runs the team for me. I have Taylor Bilecki is in charge of communications for me, sets up all my public speaking engagements, and it does some of the interfacing with Mo relative to social media.
All right, Rod. So tell us how you have your stuff structured, because obviously, as we know, I work on your team. I'm a remote worker. You introduced to me through Beth Azor. So how does that work for you?
Yeah, first of all, Massimo is a 100% virtual company. We've never had an office. I've rarely seen my people personally. My COO, my CMO, my executive admin, my director of success, all my coaches, 35 coaches, we're not in an office. We all work out of our own individual homes across North America. And so to do that, you have to rely heavily on technology, Slack, Zoom, not email. But everyone has a specific role, and BK as well. We make sure everyone has a specific role, a specific job description, specific goals and metrics to hit those goals, and consistent communication with, even virtually or in an office, with the team. Weekly meetings, monthly meetings. If you have a sales team, it should be daily meetings. That's right, daily meetings with your sales team. So just communication, not over communicate, but clear communication. And Massimo for 15 years has run that way. And just like BK, we've been very successful in building our team.
You need to have a team around you. You need to delegate. One thing I will say is that I do all my own writing, the carts that I put together, and all my social media content. I write all that stuff and I enjoy it. I enjoy the writing, but you need to have a team to help you with the implementation of all the things that need to get done every day and every week.
And Mo, since we're using some Massimo vernacular here for the rest of the audience, a cart is nothing more than a client success story. Don't ever call them case studies. No one wants to read case studies. A client success story where you outline the challenge, right? The action, the results, and then a testimonial. So that's what a cart is: challenge, action, results, testimonial.
Okay, so I am looking through the thread and I think I have just one more question. We actually went over a little bit longer than we were intending. I have this one from Paul Holzefeld. Apologies for butchering your last name. The question is, this is for Bob, and Rod, you can answer this one too. What is your perspective on the $250 million apartment and the market trend for other trophy properties in New York City?
Look, my perspective is that regardless of market conditions, there still are a lot of folks with a lot of money. And if you have the ability to buy an apartment of that magnitude and you can afford it, you know what? That's good for Ken for being able to do that. So I think large transactions like that generally produce spin off transactions that happen. And I think they're healthy for the market.
And from my perspective, I'm going outside New York. Every time you list a property or represent a tenant, you better know the distribution of likely landlords or buyers and understand where they're coming from. And yeah, there's going to be a category for the white whales: the landlord that will give you a Class A space at below market rate, or investor that will pay 20 bips over the asking price, whatever it is, right? But you need to know the distribution of your audience. So therefore, you can be more of an authority to your client.
Yep. And Mo, I'm actually going to end a couple of minutes early. I am out of time, but this was great. Thank you so much for hosting. And Rod, always great to be with you. If any of you have any questions or things we couldn't get to tonight, we'll be doing another one of these. And also feel free always to send me an email at bob.knakal@jll.com. Great to be with you all tonight.
Thank you, everybody.
Thank you, Bob. Thank you, Mo.